Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard, and happy Canada Day.
Happy Canada Day. It's 150 years. Well, if you measure it from, I guess, that date, although a lot of people were here before then, apparently.
Yeah, apparently. But we weren't officially a nation, and we weren't really independent until the 30s.
1931, something Westminster. I was trying to
the Westminster Act.
The Statute of Westminster or something like that.
Yes.
Yeah, exactly. And I brought that up with somebody the other day, and they said, yeah, but, so it's waves a flag, and don't be cynical about these things, right?
Well, I remember the new Canadian flag, 1965, October. Being out at my little Indian Affairs school in Meander River, Alberta. Go ahead, look it up on a map. You'll be lucky to find it. And I thought that maple leaf flag just looked so sharp.
Yeah, I think it was a pretty positive thing. And I'm sure this will be a positive thing, too.
And speaking of Canada, the Canuck buck, the tiny little Loonie, has been on charge the last 4 months. It's now at a 4-month high. What's behind that, Hilliard?
Well, the governor of the Bank of Canada, Stephen Plows, said that he feels that there's enough growth in the economy, and we're past the rough patch, which I think he's referring to the energy meltdown in Alberta primarily, that it might be time to raise interest rates. And as soon as he said that, and there had been some other little noises that were made over the last couple of months, but a couple of days ago he said that, and the Loonie just took off upwards. It is quite interesting. It's also partly because the U.S. dollar is weak. So, in foreign exchange we have to say it's the Canadian U.S. dollar exchange rate that's strong. But the British pound is also very strong because the former governor of the Bank of Canada, who is now the governor of the Bank of England, Mark Carney from the Northwest Territories, originally, said something similar about the British economy, and so they're talking about rate hikes there as well. And the interest rate on the 5-year Government of Canada bond has gone from 50 basis points, half of 1%, to about 1.3% in a very short period of time. So this is reflecting all of that. But I'm really wondering what they think. It's hard to imagine with the real estate bubble that we have and the debt, especially the debt crisis that is looming in Canada, how Canadians are going to be able to handle a interest rate increase. I was in a bank branch in January and talked about mortgages, and I asked them hypothetically, a young couple with $200,000, what could they borrow for a mortgage? And the answer came back right away, $1 million, no problem. And so then I said, well, what about if interest rates go up? And they said, oh, no, that can't happen. And I said, what do you mean that can't happen? They said, well, our customers would be devastated if interest rates went up. Now, this was a branch in Vancouver, actually. So I don't know. It's this perpetual motion machine that we have in the real estate, fueling the economy, fueling the keeping rates low, fueling more construction, and the real estate sector and the finance sector just keep getting bigger and bigger as a percent of the total economy. The one thing that could throw it off the rails, there's several things that could throw off the rails, but one thing that could really throw a wrench into the works would be higher interest rates. So I'm kind of surprised. I don't really think that the government, the Bank of Canada, can afford to raise interest rates at this time. But maybe they know something that we don't.
And the price of oil, too, you look at Alberta, which contributes, 23% of the Canadian economy?
Right.
If the price of oil stays low, because the Alberta budget, for example, I think was based on, a $55 a barrel price?
Yeah, the debts are growing in Alberta, and the oil is really not recovered at 40. It's at $44 on the WTI today on spot, but of course in Alberta, people don't get that price because of transportation costs, and it depends on what kind of oil you have, and Alberta generally produces a heavy oil. There's quite a discount to that, and that's not particularly profitable. So the big worry in the oil market is the surge in production in the U.S., up to 9.5 million barrels a day, really virtually doubling in the last 10 years. And there's a surplus. A big surplus in the U.S. and a growing surplus in other parts of the world as well. So everybody wants to be optimistic, I guess, but it's a little bit hard to agree with the governor's of Bank of Canada's statement that the rough patch is over. I think in Alberta, for sure, there's still lots of people that are really struggling, and the oil price would need to go up to more like $60 or $70 to really get a strong economy going again.
How did Albertans feel when BC Premier Christy Clark ripped a patch off of them for being dependent on oil?
I don't know. I think people are so upset about the pipelines and the need for a pipeline, and the fact that they view BC and probably especially Christy Clark as being an obstacle to that. I think they're quite. I think they've almost tuned all of that out. Certainly, the Trans Mountain Pipeline, or the Kinder Morgan, as it's called, would triple the capacity going to exports, and I think a lot of Albertans, even the NDP Premier of Alberta, Rachel Notley, are desperately hoping that gets approved. I guess it has been approved, but it hasn't started construction yet, and there may be still some further obstacles, but they're definitely hoping. And anybody that's seen us standing in that way is not very popular in Alberta.
Well, Premier Notley told her MLAs not to support the BC NDP in the election in May, most likely because the NDP in BC is against the pipeline.
Yeah, and I wonder what will happen if the Liberals are unable to survive the next no confidence vote. I'm not sure when.
Which is tomorrow.
Tomorrow, and the Lieutenant Governor asked the ND and the Green together to try and form a government. I don't suppose that's positive for the pipelines, although I haven't followed it closely enough to know what the latest is on that.
Well, the Greens and NDP too want to shut down Site C. Apparently, the leader of the NDP, John Horgan, has sent a letter to BC Hydro asking them not to sign any more contracts for Site C. He's doing a Trump before he's even in office, telling people what to do.
Yeah, and yet we have Warren Buffett buying into Canada. So maybe recognized as probably the number one investor for the last 50 years in the world, with Berkshire Hathaway. He recently made a big bet on Canada, and then when he was interviewed about it, said he likes Canada. So he met with Justin Trudeau and Bill Morneau recently in Seattle, and thought it was a good bet. And he's also bought in. Not only has he bought into a failing subprime lender called Home Capital in Toronto, but he's also made investments in energy infrastructure in Alberta. Bought a couple of companies in Alberta as well. So maybe that's why the Canadian dollar is strong, is because foreign investors are buying into it. But I don't know. I think generally Canada's reputation is suffering a bit right now. People are starting to wonder if it is without the oil impetus and with the concern about the housing bubble bursting. With the exception of Warren Buffett, who is 86 years old, by the way, most of the people are looking at Canada with a bit of skepticism at this point, I think.
We'll have more with Hilliard MacBeth right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're talking with Hilliard MacBeth. Hilliard, U.S. Fed head Janet Yellen, interesting headline. She says we shouldn't have any economic crises in our lifetime. We're not likely to have one. How does she know? Don't we go in cycles?
Well, you know, it's interesting because conventional economics basically doesn't deal very well with crises, and yet crises are coming along. You know, really, we're either in a crisis or we're in between crises. Those are the only two places we are. And now we did have a crisis, obviously, in the U.S. in 2009, although it didn't affect Canada and Australia very much. But the world noticed the financial crisis of 2008, 2009. Maybe she's thinking that because it's still fairly recent, you know, less than 10 years, the next one's going to be more than 30 years away. But because I don't know whose lifetime she's talking about. But it brings up a more interesting question, I think, and that is that conventional economics does not deal well at all with the cycle of debt. And there was an economist called Hyman Minsky, who I quote in my book, who explained the roller coaster ride that we are in the economy all over the world using the credit cycle and the debt cycle. And it fits what really happens much, much more closely than the models that the Federal Reserve use. So today, after that comment about we're not likely to see a financial crisis in our lifetimes, a lot of people are pointing to Hyman Minsky and saying, wait a minute, his model explains the potential for financial crises, and he would say that he's dead now, but I'm thinking from reading what he wrote, he would be saying more along the lines of we're due for a financial crisis because of the extraordinary increase in debt in the last few years. Not in the U.S. so much, but in Canada, Australia, and other countries. So the stages of the debt cycle are much more powerful than the models that the Federal Reserve use. And the interesting thing is that what they call neoclassical economics completely ignores banking and debt and money. And so that seems a little bit hard to imagine that they would actually ignore that, but that is the case, and I guess that's why she was able to make that statement. But it makes no sense. Obviously, there's always going to be another financial crisis, and it's a question of. It would be nice though if we had central banks that would actually take that into consideration. As for instance, in Canada, the authorities appear to have allowed this real estate bubble to grow to the point where when it does correct, it's going to cause severe damage. And if you had central bankers that were concerned about that, they would have done something years ago, probably 5 or 6 or 7 or 8 years ago, to make sure that the bubble wasn't allowed to grow to the point where it would cause the damage that it's likely to cause when it bursts.
How big of a piece of the pie does real estate play in the Canadian economy right now?
Well, it's absolutely amazing. Like it's just it's beyond belief, really. It's recently we hit so in the direct GDP. Interestingly enough, when you buy a house and somebody else sells a house, the only part of the transaction that goes into GDP is basically the cost of the real estate commissions and the lawyer's fee. But the actual transaction itself, even though it's very large, in Vancouver it might be $1 million, $2 million, doesn't go into the GDP. So it's measured in an odd way. But the part that's measured is the construction of new homes, the renovation of existing homes, and that thing I just mentioned, the cost of the transaction. And those three things added up to 8% of GDP. This is a new high. The previous peaks were 7%, and it just recently touched 8% of GDP. It's basically 33% larger than the peak that was reached in the United States in 2006 before their crash. And it's significantly bigger than the previous peaks, the late 70s and 1990. It touched 7% briefly, but never went higher than 7%. So today we can say without any equivocation that the direct percentage of GDP that goes to the real estate industry is the largest it's ever been, and it's never been this high without having a major crash shortly thereafter. So, but on top of that, you've got the finance component of the economy, the banks, the non-bank lenders like the credit unions, the subprime lenders like Home Capital, the one that just got bailed out by Warren Buffett, and all of the other people associated with the industry, the lawyers, real estate agents, that sort of thing. And when you add all of those components up, we're up to 27% of the total, which is much, much higher than it's ever been. I mean, the numbers are mind-boggling. So people got upset about the oil and gas industry in Alberta going from an annual investment of $80 billion a year. Well, these numbers are triple, quadruple in the real estate sector. So the loss of $80 billion in oil and gas, we didn't lose the whole thing. We went from 80 down to 20, is a minor setback compared to a setback in the real estate industry if we were to drop 30-40%. Just inactivity in the real estate industry. The numbers came out today for CMHC, and there are 39,000 units under construction in the Greater Vancouver area. It's about 20% of the total in Canada. And obviously the population in the Greater Vancouver area is not even 10% of the population in Canada. So those kind of activity numbers are unprecedented, and they always precede a major correction. It is, we really are living in historic times when it comes to real estate.
30,000 units under construction in Vancouver?
39,000.
39.
So what that number is so you see the number of housing starts, and then you see completions, right? So somebody at CMHC does the math, and we're at 39,000 now. I don't know. I read there's a great interview with Sam Cooper from the Vancouver Sun talking to one of the other radio stations, and he was talking about shadow collateral from China. And I'm wondering if the number of units under construction in Vancouver is elevated artificially by a slow construction. In other words, if people are buying and selling these units before they're completed, obviously you only have to put a small amount of money down. And apparently there's a lot of flipping that goes on before the unit's actually completed. So in a perverse kind of way, the longer it takes to complete the building, the happier people are if that's what they're doing. Right? So they have no intention of moving into the building. They just want to enjoy the flipping while the flipping is good.
Well, I heard from a friend who had a friend who made $300,000 doing exactly that. They never moved in. It just was continuous flipping of a condo.
It's amazing. I mean, a condo, like, what are you buying? You're buying a box in the sky. You get very little land. It's just mind-boggling, the idea that people are putting this much money into a space, and of course, the other thing about Vancouver is 39,000 units under construction, which is very interesting, is, of course, they're not like regular condos. They might be common in Edmonton or Regina or something. These are probably very expensive condos. I don't know. I haven't checked the actual numbers, and it would be difficult. But I'm guessing that a lot of these are probably expensive buildings. So that is a major crisis, because if people actually can't actually afford to move into these units and they're just buying and selling them to make a profit in the meantime. When that for whatever reason, when that ends, whether that's a crackdown by the authorities or people just move on to another hot real estate market someplace else in the world, the devastation that will follow will be quite large.
We'll have more with Hilliard MacBeth right after this.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp, RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Hilliard MacBeth. Hilliard, one of the things that I've heard is, yes, Greater Vancouver does have a foreign homebuyer tax, 15%, but there are no rules about who can lend you the money. And one of the rumors going around is, if I'm from China, if you can find, say, 40, 50 friends who can drum up the money, they can lend you the money to buy a property. You default on that property, and that consortium now owns that property.
Yeah, it's a murky, dark, secret world, and but certainly there's lots of anecdotal stories about crowdfunding from China, where people pool their money. Their $50,000 that they're allowed to move out of China, and they pool it together and put the money in. But the report from the Vancouver Sun by Sam Cooper indicated that the Canadian banks are allowed to take collateral in China as collateral against a loan in Canada to buy Canadian property, which raises a whole bunch of interesting questions, like, how do you seize that? How do you seize that collateral if the people default? So it's a and you could have even creative defaults where maybe the collateral was somewhat questionable in China, but it's by borrowing the money and then moving it here and then buying something here, people get a chance to move that amount of money out, and by circumventing the rules. So it's there's no question that there must be some of that going on. Certainly the research done by other people, not by me, but by other people, it shows pretty strongly that there's more of that going on than people realize. And I think that the changes in November, December last year, with the CRA and the CMHC, and probably at the banks too, although they haven't announced anything publicly, all of that will make a difference in terms of slowing this down.
Well, the Toronto Real Estate Association announced that they expected 30% of Toronto homeowners to list their properties this year. Is that a number they just pulled out of the sky? Is that realistic?
I think what they did was they phoned people and asked them. And that 30% of the people they phoned said they're planning to list their property, which is, it's one of the things that I've noted often is that people don't realize the turnover is quite small. I mean, and certainly in Vancouver it's much higher than normal, but in normal times the turnover is less than 10% a year. So if even 10 or 15% of the people, for whatever reason, say there was a recession and they got laid off from their job and they couldn't make their mortgage payments, and even 10% of those people, of the total homeowners, decided that they had to sell their house, the market couldn't possibly absorb that amount of product. It's a very illiquid asset. It's not like the stock market where you just push a button and you can sell it. I mean, obviously if you have 10 million shares, you've got a problem, but if you got 1,000 or 2,000 shares in almost all companies, you can sell it within a minute or two. But this is not the same. This is why we have banking crises, and this is why we have financial crises, because the banks raise their money in short-term deposits usually. In Canada, 5-year GICs, the longest. And then they finance purchases of assets like houses where the loans don't get repaid for 25 years. So they can't call in that 25-year loan that easily. The homeowner, when the bank approaches the homeowner and says, I need you to pay the money back, the homeowner says, well, I tried to sell it, I can't sell it. I mean, the cycle just keeps going over and over again, and yet we seem to be okay with it. And it's obvious that those loans are very, very difficult to collect in any kind of a setback. Even a mild recession at this point in Canada is going to cause major stress with people who have lent money, whether the collateral is in China, the collateral is in Vancouver, the collateral is in Toronto. You can seize the collateral. Yes, you can go and you can get a lawyer and say, I'm going to seize your house because you didn't pay your mortgage payments. I think it's 3 months in a row or something. They have the right to seize the collateral. But what good does that do the lender if they can't sell it? And obviously all the lenders are going to be seizing their collateral at the same time. In normal times, there's always one or two occasionally people that run into trouble. But in a downturn like we're imagining right now, there would be literally hundreds of thousands of Canadian houses that would be seized by the lenders. And how could they possibly find the buyers to sell those? So then what happens is the banks take those, as they did in the U.S. in the financial crisis. They take them and they put them in kind of a holding tank, if you like, and they rent them out, and they wait for the market to recover. But that's a long, long process, of probably 10 years before the market recovers sufficiently to allow the banks to... in Japan, the peak was in 1989, and so now we're more than 25 years later, and they're still recovering from that crisis because too much money was put into illiquid assets. The banks lent the money, and now and for decades the banks were considered what they call zombie banks. They couldn't do anything because couldn't collect the loans that they'd made. They couldn't sell the collateral that they'd seized as a result of the bad loans, and so they couldn't make any new fresh loans.
Well, I think maybe seizing the property was the worst thing they did because now they're responsible for selling it. And if you want to know what happens when everybody moves out, look at sections of Detroit that are totally abandoned.
Yeah, and yet, it was interesting. In the U.S., there was tons of banks that didn't even seize the properties because what was the point of seizing them when they couldn't sell them anyway, right? So the people actually continued to live in these properties where they defaulted for an average of 24 months, 2 full years, before they got, eventually the banks forced them out and took it over. And then the stupid thing about that is all they did was find renters to rent the places, right? So it almost would have been better to allow the defaulted mortgage holder to stay in the property and pay rent instead of mortgage payments. But it's hard. I mean, there's a bias against helping people that have defaulted because people feel like, well, why should you help those people? They've proven themselves to be bad people because they didn't pay their debts. So, but if you could get back past the morality of it, it would be better to somehow make an arrangement with the person who can't pay their mortgage payments anymore just so they could live in the house.
Well, they'll maintain it, which means the property keeps its value. In the U.S., in cities where homes were abandoned, the cities themselves, to keep the uplook of the neighborhood nice, went out with green food dye and sprayed all these brown lawns to make it look like people were still living there.
So we were just talking about the number of houses and apartments under construction in Vancouver, and I've got British Columbia's 48,692, but 39,000 of those are in the Greater Vancouver area. And the total for all of Canada is 211,000. So BC's well above 20% of the total. So don't let anybody tell you there's not enough supply. Unless they're building completely the wrong kind of units, there's an enormous amount of supply. Ontario, by comparison, is 97,000. So BC's exactly half of Ontario. And
statistics show that in a year, Vancouver gets between 20 and about 40 1,000 new residents.
Well, the numbers, they do show that, but there's also a lot of people that move away, so you have to look at the net number.
Oh,
right?
They never announced that.
So, there's no way that the number of new people is enough to absorb all of these units under construction. It'll have to be speculators, or obviously, as I say, there will be a massive correction. You could call it a crash. The construction will stop, and then eventually this will all get absorbed, and we'll go back to normal again. But that's a long slow process. In the meantime, people should be very, very careful about buying properties, even in Vancouver, as it requires there to be all that new money coming in every day to absorb this incredible new supply that's hitting the market.
Hilliard, always fun chatting with you.
Thanks very much.
My guest has been Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.